This is Mario Zelaya, and today we're going to learn fun facts about things that lenders won't tell you, but Javier will tell you all about them.
Javier Garcia, Senior VP here at Rate Companies.
So Javier, I got a question. How do we know each other?
Man, that's a good question, actually.
Right? It's a good starting question.
I want to say the first time I ever connected with you was because Antonio Sarmiento, when you were at 606 Realty,
Yeah,
I knew him and his wife.
Yes.
So when you guys partnered up together to open up that brokerage, I think that was the first time we ever got like formally somewhat introduced. So I got to give the props to Antonio because I remember him telling me about you.
Yeah. Props to Antonio.
Props to Antonio. Hopefully you're
That's
doing
my
good
guy.
out there. Yeah,
That's good.
But I think that was the first time that we came across each other. And then you just always seemed like a really cool cat, you know?
And I think after that, we just kind of realized we have so much in common.
Dude.
Background, friends.
And then also I saw that you were a big fitness guy, right?
Yeah,
So like
yeah,
obviously you guys can tell this man works out.
Try.
So for me, like it was part of my fitness journey as well too, right? I was like a really heavy guy, 345 pounds at one point in time.
Oh.
So that was also another reason I gravitated towards you, because I used to see like you were Mr. Fitness, always working out.
It's been my life.
And believe it or not, we both post our workouts sometimes, or you know, stuff like that. So that was always something that like really attracted. I always say, birds of a feather flock together. So
correct.
we kind of had.
But we do like we do love cheeseburgers.
Yeah. 26 years, you're going to learn a lot from this business, right? So there's a couple things that you could personally do as a potential first-time home buyer to prepare yourself so that A, you're getting a good interest rate, B, preparing yourself to have a smooth process along your transaction. And everybody knows about the hype that's going on right now with the homegrown grant program here in the city of Chicago.
Yes.
However, there's a lot of details with that grant that really come into play if you want to make sure to capitalize on the $70,000 grant. So that is what we're here to share today, because a lot of people sometimes think buying a home can be impossible or too easy, because I also get those clients, right? Where like they're taking it very lightly, and we're having to stalk them for documents, stalk them for updated financials sometimes, or things like that. I would tell you the number one thing that people are doing as a mistake is that they're reactive with their process instead of proactive. And what I say by proactive, I did a reel recently, right? So if you're in the process of buying a home, this is something that's come in recently, Affirm, Klarna accounts, right? Those Afterpay. So I'm not aware of a lot of that because I've never used it, and I can tell by the look on your face, right?
I'm like, tell me about it.
So something that consumers are getting access to, and this has kind of come into play the last 2 or 3 years, is like if you were to charge something on your Chase checking account, let's just say that, or maybe a credit card that you have an option where Affirm will allow you to spread that one charge into 4 payments.
You know what? I get that with my Chase sometimes. When I make a purchase.
Yes, you see that option, right?
Would you like to make this in 4 payments? I'm like, thank you, but no.
Right? So we're older generation, so we're used to like when they try to solicit us at the store, right? Like, would you like to open up a department store credit card? And you're like, no. So we're kind of
what's behind that?
Right.
I've never clicked yes.
However, there's a lot of consumers that are starting to click yes. And right now, I do definitely see the squeeze that we're seeing in the middle class, right? I always say, I don't feel like there's an upper class and a middle class and a lower class. You either have it or you don't. So one thing that's happening is that a lot of those Affirm accounts, those Afterpays, right, is basically you're entering into a contract installment agreement for that debt, but that debt doesn't report on your credit report. Right? So you can actually go and do a pre-approval with someone and not realize that that debt isn't being reflected to your loan officer or to your bank.
Okay, so let's take it one step back.
Yeah.
What should buyers be doing right now to get to the process, get to the finish line with you?
One thing that I tell my buyers is get your down payment in your own account. So we as loan officers, lenders, mortgage brokers, we use 2 main softwares. We have Loan Prospect, which is a Freddie Mac automated underwriting system.
Right.
And we have Desktop Underwriter, which we use with our Fannie Mae systems, right? So either way, whether you're getting an FHA, a VA, a conventional loan, you're going to be run through this automated system. That's how they actually see and determine whether or not you meet qualifications for your loan. So what a lot of people don't understand, and they come to me a lot of the times, it's like I look at their bank statement, I'm like, where's the money coming from, right? So the one thing that I tell people is when you're getting a gift for your down payment, it downgrades those funds.
That gift.
Because it's not considered your money. It's considered a gift that you are receiving for the transaction.
So I'm gonna cut you off there. So the gift is not always a positive thing towards your approval.
Well, sometimes when you need it, right?
Well, you need it.
But
Correct.
you can elevate the worth of that gift by getting into your bank account 30 days prior to you actually starting the home buying process.
Okay.
Because after 30 days, that money is now considered yours.
Which helps the underwriting process.
Seasoned. So what it does, the system is like, oh, this is Mario's money. Mario's not having to ask his mom for $20,000 gift in order to be able to buy this house. So it strengthens your profile. So having your down payment funds available in your own account prior to you beginning the home buying process is crucial, especially if you have lower credit scores, right? Because that's going to give your application a little bit more strength.
So this is telling me we need the buyer to be a little more proactive.
Proactive with their funds that they're going to need. A lot of the times, and I get it, sometimes our parents are going to help us with the down payment, or we have arrangements where maybe, you know, a cousin's going to help you or a brother is going to help you, those situations. But getting those funds into your bank account 30 days prior to you beginning your home search makes those your funds because it's now seasoned, as opposed to it being viewed as a gift.
Got it. Okay, so question, for the first-time home buyer watching right now, what are the first steps they need to take?
Do a mortgage application.
Okay.
I always tell everyone, number one thing, your loan officer is your doctor. So the first way for him to know your financial physical is by getting a mortgage application completed, right? So the mortgage application these days is a soft pull credit, which seems to be a reason why a lot of people sometimes don't want to complete an application. So number one is that. Number two is getting your financials ready, right? So you need to have 2 years of tax returns ready. You're going to need, if you're a W-2 employee, which means that you are working for a company, you're going to need to have the most recent 30 days worth of pay stubs as well too. When it comes to your assets, your bank statements, your 401k accounts, you're going to need to have the most recent 30 days. If it's a quarterly statement, your most recent quarterly statement for that as well too. And those are basically it. We just need your finances and your assets to determine whether or not you're ready to buy a home. The third and final step is getting you connected to Mario, right? To your real estate agent and creating that search. Right now, I would say the hardest part about buying a home is not getting pre-approved. It's finding the home within your budget. Affordability.
So on affordability, that's a great point that you make, because a lot of times I'll get a pre-approval. Let's just use easy math. Your pre-approval is $500,000. They send me listings up to $500,000. I always ask, as the realtor, listen, I know you're qualified for $500,000, but what's your affordability? What can you afford per month? What are your thoughts on that?
That shows that you're a veteran. All right. So I always tell everyone, I've been doing this probably for the last 15 years out of my 20-something year career. It's not about how much you can afford on a dollar level for the home. It's about the monthly payment. Right. Because I always say PITI-MI, right? So your pre-approval is really based off of what is the maximum mortgage payment that you can afford, not the mortgage amount that you hold, right? Because what's included in your mortgage payment? You have principal, interest, taxes, insurance. If you're not doing 20% down, you're also going to have PMI, right? So the most important thing about affordability, I usually ask, and let me ask you this question. When you want to know someone's affordability, what's the question that you ask?
There's a series of questions. First of all, I want to know how much debt they have monthly. Car payments, maybe other mortgages. Things affordability is about what are you comfortable with on a monthly basis. If you could not make your monthly payment this month, do you have reserves? You have to be comfortable with your monthly payment. That's the bottom line. Yeah, absolutely.
For me as a lender, what I ask is, where do you want to live? Right? Because different neighborhoods have different tax rates.
Correct.
Right?
Can't forget about the taxes.
So, like, I'll give you an example. Maywood. I have an affinity for Maywood, right?
Really?
But the reason why, and it's because I spent a lot of my summers when I was a kid working in Maywood. My dad actually worked at a little shout out to Morris Meats packing out there in Maywood. But Maywood is a town that actually has really high property taxes.
Yes.
Because they have a lot of historical homes in Maywood.
Correct.
Right? So even though a home in Maywood could be selling for $300,000, if you're looking at a $11,000 tax bill, because that's kind of the norm in Maywood.
That is the norm there, yeah.
Compared to a $350,000 home in Melrose Park where the taxes are only $6,000, $7,000, that monthly payment's going to be different. Right? So I always ask my clients, where do you want to live? Because then that's going to give me a good idea of the median area tax rate, and then kind of gives me like that pendulum of like, all right, how much are we actually going to be able to afford?
The real numbers.
The real numbers, right?
Yeah,
because that'll tell me whether or not it's going to be a possibility to buy in the neighborhood.
Correct. All right, let's talk about, this is always a topic, FHA conventional. What's your thoughts on, and how do you plug people in?
I really do say FHA, like if we're talking and being specific of like, what is FHA really meant for, right?
Correct.
I always say FHA is like usually if you have a higher debt profile, right? Where you maybe have more debts under your name, right? And you're gonna need a little bit more buying power. The biggest restriction, conventional, usually you lose your approval at like 48, 49% debt to income.
Okay.
That means that your new mortgage plus all of your debts divided by your income should not exceed 49% of your income, right? FHA sometimes allows us all the way up to 58%. So it gives us a little bit more buying power. However, I always tell people, I'm not going to sell you smoke and mirrors either, right? FHA does have 2 mortgage insurance, which is something that a lot of people don't seem to understand, is that you are going to pay HUD 1.75% right off bat to insure your mortgage. It gets rolled into your loan, right? So that's why you have a base loan amount and a total loan amount. And then you're also going to have monthly mortgage insurance. Whereas with conventional, you're going to have the option of either or. Now, the thing where it becomes super stringent is that FHA, because it is a government-owned, it's a government loan product, right? The property needs to be habitable from day one for the occupants.
Correct.
Right? So that's why sometimes where I see listings where they're like, no FHA financing.
Oh boy, yeah. That's
it's not necessarily, but a lot of the times it's just because either the seller doesn't have the money to make the repairs needed, right? A lot of the times it's scrape paint. A lot of people ask me like, Javi, why is scrape paint such an issue?
Chip paint in the garage.
Well, it's because prior to 1978, we were using a lot of lead-based paint, right? And lead-based paint is hazardous to the occupants. So those are issues like anytime you see a home where it's like a lot of paint and scraping that is needed, usually they're going to want conventional finance. Conventional financing is lenient. However, urban legend that I am about to debunk right now and just bust that myth right now, conventional doesn't mean that you could buy a house that's infested with mold. I've had realtors fight with me because they're like, we got conventional financing. It's like, do you not see the black mold over there in that corner of that basement, right? So anything that could be a hazard to an occupant, conventional will also,
mold's serious.
They'll have to flag it, right? So something that's very important, consumers, you can sue everyone in the transaction if you really wanted to. And that's the reason why condo associations are tougher to pass now.
I'm always going to blame the lender.
All right? And the reason everybody heard about the patio that fell in Florida back during COVID, right? That family sued not only the developer, the real estate firm, the home inspector, but the lender who decided to lend and let them buy that property.
Wow.
Right? So that's why condo restrictions have actually gone a little bit higher ever since that event. Because
I saw
everything
that notice a few months ago.
Everything has to kind of pan out, right? But that's just something where a lot of people need to be aware. FHA is there to give you more buying power, maybe be a little bit more graceful if you have lower credit scores. Like I actually closed one transaction when I first got to rate, which everyone was like, what FICO score is that? And I was like, 578.
Oh.
And I'm like, how are you closing that?
I thought 580 is the
Yeah,
you do
but my
5
client
yeah.
had 10% down, right? So
Okay.
they did 10% down
Okay.
payment. They had gone through their own struggles and everything in life or whatever. So it was like totally understandable. But we got them to the closing table, man.
Good job.
So like, you know, that's one of those
Yeah.
situations, right? Where I do tell people, do your application, number one, because that's going to give us like an idea of what can be done.
Makes sense. I've been seeing a lot in the news, on my Facebook feed, on my Instagram feed, a lot of realtors talking about this homegrown program.
Yeah.
Educate us on it.
So believe it or not, I don't know what the plan was with that program because I feel like nobody knew about it and all of a sudden it went viral like within 24 hours, right? I believe it's a great program. And this is the part where I'm telling everyone in our business, because I saw loan officer and realtors complaining about the 38% DTI cap, right? And this is the thing where I'm like, if I have to play, you know, advocate for the city of Chicago for this grant and some of the restrictions that they created, right? Is that this down payment of $70,000, it's really meant for making housing affordable. Our realtor agents over here wanted to use that so that we can increase your purchase price and your buying power, right? So what I'm telling people is that that $70,000 was meant for a down payment, not to increase your purchase price from $300,000 to $370,000 now, right? So that's where I feel like a lot of lenders drop the ball by not explaining this to consumers and their real estate partners, because I have a client right now that is currently using the product. The key is that you need to be under contract.
I'm gonna stop you there. I'm glad you said that, talking about the lender. My inbox went nuts with that, okay? And I tell people this, listen, I'm a realtor. Let's talk to my lender, who's the advisor on this program, to educate you correctly. So you're right. I mean, a lot of us realtors don't know about it.
And technically, it's not even a program from us as the lenders. That's also something to be very, very aware of. That's why, like I told everyone, I'm like, I'm not gatekeeping, I'm not anything. Here is the link, because it's a City of Chicago program, right? So the City of Chicago is participating in it. You can work with your lender, and if they're participating in it and they will accept the funds from the City of Chicago, it's a done deal, right? But that's the thing. Sometimes I always say I'm the nerd of this business, right? I like to learn. I like to educate myself so that this way I can better prepare myself. But I have a client that, like I said, he's under contract, and we literally used a down payment assistance, the 70 grand, to go towards it. His income was actually at a higher level bracket, so he's only getting 40 grand instead of 70 grand, okay? But he went from doing 10% down to all of a sudden making 30% down by using the funds that were in with this grant,
huge.
right?
That's huge.
So that's huge.
Yeah.
And the reason for it is because we used it correctly, right? He was already approved for, you know, a certain amount, which was at 45% debt to income ratio, which is our cap. But we used the money to go towards the down payment, and it brought down his ratios to a 33%.
Wow.
Right? So that's the part where I do tell everyone, let's use the program right, and we could really go help some people. But the most important caveat, which I was not aware of until like my first go around, was that you do need to be under contract in order to submit your application.
Oh.
If you weren't under contract, you're basically, it's kind of like sitting.
Take that back. So you have to have already
you have to
a
be
full
under contract,
executed
a
contract
full
in place,
executed contract
and then
in
the
place.
loan process starts.
Yes, which is why I urged a couple of my...
So let me take you back. As a realtor, when you have to send in a pre-approval, how does that?
Well, technically, it's still conventional financing because there's not a second lien. So that's the great part about this. It's not like a repayable loan that you have to do. You do have to meet the qualification of staying in the home for 5 years, right? For it to be completely forgiven, but there's no secondary lien position or anything like that that's going to be
So it's completely forgiven.
So it's completely
That's
forgiven.
one of the questions I had.
So that's like a really good benefit of the program. Somebody was telling me as well too that, you know, when it comes to like the restrictions for it, it does have to be City of Chicago. It wasn't a Cook County thing, which I felt like a couple people kind of mislabeled it at first and were like, oh, this Cook County program. There are some other Cook County programs. But this one was specifically meant for the City of Chicago. They want to keep Chicago residents invested in Chicago, not going to the suburbs, right?
And a lot of people get confused with Cook County and City of Chicago.
Correct.
People assume that Cook County is the City of Chicago.
It's in there.
It's in there, but it's
But it's
not
pretty
gonna be
vast, right?
Exactly.
But it's definitely a program that is good. It's up to 2-unit properties as well too. So 1 to 2 unit properties.
Multifamily.
I would tell anyone, honestly, like if we're really being honest, this is perfect for that young, recent graduate who's just got their new job, right? And that's something where I'm telling a lot of people, a lot of these kids are starting to make some good money like early. I just took an application yesterday from a young lady, and she's already making $85,000 a year, 1 year out of college, and she landed a great job, and she qualifies for this program, right? So it's like, well, now we got to hurry up and get a contract because there's only about 400 of these grants that are going to go around. The city of Chicago is pretty big, right? So the one thing where I really feel like some agents could have maybe capitalized a little bit more, and I know 2 or 3 that did, if you already had clients that were under contract, taking a look whether or not they fit the requirement, if it was already in the city of Chicago, and then boom. That's how I got that client, to be honest with you, right? He was negotiating his contract the weekend before they announced the program.
So you plug them in.
So he was like easy plug and play, like, hey, you know what, like we could use this and we can maybe make it better and better rate offering as well too, right? So it's a way for us to kind of use the program correctly the way that it's meant to be used. Unfortunately, like I even had some people, I'm not even going to mention their name, but like they were mad at the city of Chicago for the restrictions that they placed. Well, why are they doing 38% DTI? It should be 55 or whatever it is. Well, if I'm being honest,
give us a reason, your thoughts.
We have to be conservative, right? And I made this, and my industry people are probably not going to like it, my loan officers, right? 38% debt to income ratio off of your gross income. We know you're not taking your gross income home, right? You're paying taxes, you're paying FICA, you're paying Social Security, you're having other deductions. So is 38% really that tight? Not really. Anything at 55%, I think you're kind of squeezing the budget a little bit too much, right? So I always hate the calls when I have a client call me and tell me, hey, Javi, I can't afford my mortgage anymore. I'm thinking about possibly selling now. That's tough. Very rarely have I had that conversation, but I had it once or twice, right? So that's the thing. We have to protect our consumers as well, too. It's not just about putting them into a home. It's about putting them into a home where they're going to stay in that home and have success in that home, too.
Correct. So let me ask you, you've been in the industry for a while, of course, you're a veteran. What has changed from the day you started to now? What has been the most?
If I'm being honest, information overload, right? So there's so much information out there between social media, what you Google, and everything else. So there's a lot of misconceptions sometimes, right? Like I always get clients that are coming to me and literally are asking me to do fraud. Hey, Javi, I want to buy this house, but I'm not really going to live in it, man. And I was like, you know that's the biggest fraud that happens is occupancy fraud? And he's like, but I saw a TikTok. You're like, yeah, that TikTok's going to land you in jail probably or something else, right? So I would say that there's an overload of bad information out there. That's number one, right? We have so much accessibility in our hands sometimes to bad information. And honestly, there's a lot of car salesman people in our business. Your business and my business as well too, right? That's the truth. But the second thing is, which I think is the best thing that's happened to consumers, is a soft pull pre-approval, right? When I first started, man, you had to be really good to get someone to give you a Social Security over the phone, right? Can you imagine? I'm a complete stranger asking you for the most like coveted information that your mama tells you, like, you better not give this to nobody, right? Like I remember my mom had my under the bed or whatever. That was the safe in my house, right? I come from very humble beginnings.
That's so true.
But these days, man, just the fact that you could do a pre-approval without a hard hit inquiry, right? You don't have to worry about like, man, my credit's gonna take a hit right now because of that hard hit inquiry, right?
Correct.
The fact that you can do a soft pull and be able to find out like, am I ready to go or am I not ready to go? Is there something that I need to do? I love the fact that we have
is that effective?
That's super effective, right? Because sometimes, like, you know, I'll do a soft pull and I'll be like, oh, there's a couple things on here. Sometimes they're incorrect. Maybe they're misreporting, and we're able to go back in and kind of fix that as well, too. Also, what I love about that is, like, let's just say someone that's, like, well qualified already, right? I do this all the time with my clients. It's like, hey, you know what? We're doing 10% down. You got a 716 credit score. I could get you a 6.5 interest rate with that 617, or you could pay off this credit card balance that you have over here for $200 and this one over here for $300, and I could get you down to a 6.125 because now we're going to get you to a 740 credit score. So there's different tiers in credit that will sometimes get you more money, right? So that's the part where I tell everyone, you're going to benefit from the nerd that is treating your money like it's my money, right? So that's the part where I always tell everyone, there's a difference between working with a skilled professional and then someone, I give all the props in the world to these young bucks.
Or someone just taking applications
that are out there and they're hustling, because I was them. I was them at one point in time. But then through business coaching, right? Experience. Like I've closed over 20,000 transactions in my lifetime, right? Because like my first 10 years, I was a lead guy. So I never worked with realtors. That's what a lot of people don't understand. I popped into the scene as a high producing loan officer in Chicagoland area, and everybody's like, who the hell's this kid? And it was because I was working lending tree leads, hot point leads, like any lead.
Landing tree leads.
Landing tree leads. So like I was used to consumers having 5-6 options already, and then having to earn their business.
They're still around?
I think they are. But these days, to be honest with you, social media has become the new lead source.
You know what? And I'll take it in my industry as well, my side. Back then, let me quick story. When I started at Century 21, a lady tells me, Mario, you're lucky. Back in my days, if I missed a signature and DocuSign, I had to drive 40 miles back to get the initials. And there was a book that came out every month with the listings.
Oh, man.
Yeah, it was like a Sears catalog book, you know? She's like, now you guys got the social media, you got Redfin, you got Zillow, and it's good and bad. You know, a lot of consumers dive in online. They don't see things that we see.
So here's something, because you've been doing this for a while, right? So your opinion matters, and I'm pretty sure it matters to a lot of people out there. What is one thing that you're seeing these newer agents doing that maybe rubs you the wrong way, or you're like, I don't know about that? Is there anything that you're seeing like trending or anything like that with like newer agents, or the way social media is kind of like taking over a little bit?
Yeah, it's more social media. I think people now just dumping everything in social media without first getting educated.
Okay.
You know, I think you need, before you start throwing things out there to the public, you need to get a couple of deals on your belt.
For sure.
You need a couple of deals about you, because you learn from your mistakes. And one thing about me, if I don't know something, I'm gonna get you an answer.
Okay.
If I don't know something with financing, I'm gonna call you.
Right.
That has to do with law, let me call my attorney.
Right.
I'm not gonna give you the choppy answer.
Right.
You know, I don't like kind of what they say, coming back, stepping back, where, you know, coming back to correct something that I should have been ahead of in the beginning.
I like that, man.
Yeah, absolutely.
So do you recommend for like a newer agent to work like with a team, or like?
I was just gonna say that. Find a mentor and a team. Find a mentor and a team. It's important. Because you know what? A transaction is the person's biggest purchase of their life, maybe. And honestly, you want to be correct, and you want to keep the relationships with your clients.
Love that. So my mentor that gave me my first job as a 16-year-old, Peter, Polish Peter, and he used to call me Mijo. Okay, he used to have Columbia Mortgage over on Belmont and Long. Okay, and
Columbia Mortgage. Okay.
The one thing that he really instilled with me, right, which is why I always tell people all the time, what working on a good producing team, because there's some teams that are not good, right? I see a lot of people out there like this team, and they're like, who's the team? They have no team structure, no anything. I came from a guy who was so dialed in that when I was ready to leave his team, I just replicated everything that he did, right? So that's the part where I see a big gap right now.
He was your mentor.
He was my mentor. He was my boss, but he was my mentor because
you know my mentor, Baxty.
Oh, okay,
she was my mentor. That's mom.
So like that's the thing where I tell people like you do need a mentor, because you need to see how we're transacting. What's the best way to handle a conversation sometimes, right? I always tell everyone the biggest thing that you need to figure out in this business is peeling the onion. People are like, what's a peeling the onion? How many layers does an onion have? Tons, right? You know, you got a couple, right? So every person, every consumer has an onion. You got to peel it and find out, how am I going to help them? What's their need? What are they afraid of? I see a lot of people that technically could have bought a house like years ago, but it's not always procrastination. Sometimes it's a fear. A fear of not feeling worthy.
Yes.
A fear of feeling that they're going to be told no. A fear that they're not going to have enough. I had a consultation with a young lady last Friday, and she's like, I don't think I'm ready, Javier. And I was like, why is that, girl? You got a 780 credit score. You got low DTI. You got some money in the bank. Javi's got the homegrown program, DPA.
You got it all.
¿Qué te pasa?
Yeah.
Like, what's stopping you? I think you're in your head. And she's like, you're right.
Yeah.
She's like, I think I'm in my head, right? And then her realtor calls me back, the one that sent her over to me, and I was like, we're gonna love on her. Because that's what I'm realizing, Mario. I grew up with a lot of love, and I know you grew up with a lot of love, because you're a very loving person as well too. Like, that's also one of the reasons why I gravitate to you, man. Like, we always shake up, you know,
always,
everything, always
like
giving each other love, brotherhood, you know, man. And praying for each other and stuff. And I've been praying for my clients as well too, man. But I'm realizing not a lot of people got love in their life.
No.
Even from their parents. I could tell everyone, I grew up with very humble beginnings.
Yes.
But mommy and papi loved on Javi.
We talk about that all the time.
We always talk about it. I always make a bad joke about it when people tell me, like, what's your secret to success? My mommy told me I was beautiful and I was intelligent, and I believed her.
Yep.
There's a lot of people who don't have that life spoken to them. And it's up to us to speak that life to them, to give them animo, like we say in Spanish, right? We got to get them motivated and like put that love in them and be like, no, you're ready.
No, fear is real.
Fear is super real.
I recently had a family under contract in Elmwood Park, and as soon as we got a contract, our offer got accepted, she's like, all of a sudden, I'm so scared right now. I'm like, Martha, relax. The goal was to get under contract. Let's breathe. And she's like, okay, thank you. Sometimes you got to be there for them.
You got to be there for them, man.
Yeah.
It's like I had a family that we closed last week, man, that it really meant a lot to me. Because this was my second transaction with them, right? I helped them buy a home like 3 years ago, and they sold that property because they were a little bit over their, well, actually they weren't, I'm gonna take that back. They weren't in over their head. This mayor we got over here, everybody's increasing these city taxes, all right? So their property taxes doubled.
That's a whole another episode.
That's a whole different episode. But long story short, their property taxes doubled, man. So like the monthly payment got out of control for them. They got to the point where they're like, we can't handle that payment anymore. So we had to sell that property and find another property, right?
Wow.
But along the way, we had a couple bumps, right? You know, some surprises. Some of those Klarna accounts or Affirm accounts kind of came up. But I had to continuously pour love into them, speak affirmations to them, because I told them, I was like, I actually don't want to let you walk out of this year without owning a home, because I don't want you to fall into the trap where you owned a home, you sold it, and then you're back to renting for another couple of years. And like I've been telling everyone,
I'll tell you right now, that's what helps. That's what you stand out from other mortgage lenders.
1000%. I always tell everyone, if you like, what's my secret sauce? I care not only about the client, I care about my agents as well too, right? But I'm gonna do it in a very loving way, and sometimes I gotta play bad cop too.
I know.
Like I get it. Like sometimes I'll have like some of my agents who are a little bit more introverted. He just kind of checked me and said, like, we kind of stopped lowballing, and I was like, yeah, you submitted 4 offers, and we didn't even have a chance because we lowballed them, because you're trying to think that we're gonna get a bargain deal. In this market, we're not.
We've got no inventory. Lowballing is not.
Every once in a while, like if a property's been sitting on the market for 4 months,
if
5 months,
the market time is there,
like maybe they're motivated.
I always have this rule: if the market time's over 30 days, let's think about, maybe leveraging the pricing here.
But then sometimes we gotta be like, hey, I'm here to help you, but I'm not gonna be able to help you if you don't let me lead. Right? And that's the thing I always tell people. People don't want to be bossed around; they want to be led. Right? So that's the thing where it's like we kind of have to lead people sometimes and be like, hey, this is what I feel is the best thing for you, but at the end of the day, it's still your final decision.
I love how you're an educator and proactive, not just one of those lenders, just here's a pre-approval, Mario. If you need anything, I'm here. You're always...
Because that's the extra level. Some people ask me, like, what's my holy grail? Right? And I've had this reputation. I always speak up. I've had fights with attorneys, realtors, lenders, everybody.
No names.
Right? No name, no nothing, you know? I love everybody. You know who I'm talking about. But the one thing that I do really stand on, the fact is that I've always made the client my #1 priority. So when they need something, they call Javi.
Yeah.
Why? Because they felt that love. I didn't treat them like a transaction. You know how many times? Yeah, I was told you, I was like, I referred out 14 listings this year, right? Sometimes I ask them, like, what happened to the agent that helped us with the purchase? I haven't heard from them.
Yeah.
So that's a whole nother episode where, you know, for my agents, I tell everyone, even if your company offers you some random newsletter,
stay top of mind.
Just stay on top of mind. Put their database in there, and at least they'll get an email from you. Because some people just forget. So when I see like how many realtors
I have a little
didn't even
thing that I do.
Yeah.
So at the closing, every closing, I go 1 year ahead of my calendar and my anniversary date. And then not only there, I set myself a week behind as a reminder. If I send them something, keep in touch, give them a call.
This is what I tell everyone, okay, bro?
We're not going to remember everything.
Let's be honest. The top 1% of realtors, how many transactions per year? 40, 50?
40, 50.
Right? So that's 40, 50 people a year.
Yeah.
Right? Do this, and I'm going to leave you with this. This is what I do, and this is what keeps me successful at all times. I do what's called an annual mortgage review.
Yeah.
Where I just call my client back there on their anniversary, just like you said, right? And I'm like, hey, how's everything? How's the family? Do you guys need anything? Do you guys need access to money? Do you need to pay some things off? No, Javi, we're good. All right, good. Every realtor can do the exact same thing every year just to touch base with their client. Hey, happy anniversary. How's everything? Just wanted to check in. You want me to send you a CMA so you know how much your house has gone up in value, how much your investment has gone up? You just keep doing that every year.
So much
There's 365 days a year. You could like select a day during the week where you're like, you know what, on this day I'm gonna call some of my past clients back or whatever, update your database and everything, and then just make it a habit. How many potential annual reviews can you do in a day, right? Unless you're like killing it and
of course,
deals.
That'd be a nice problem to have.
Yeah, that's a nice problem to have, right? But that'll keep you on top of mind, and when that client decides to sell, they're gonna come back to you.
Correct.
Because I did get reached out about that one client who didn't use the original realtor for sale, right?
Yeah.
And it was like, when was the last time you talked to them? Or when was the last time you spoke to them? Or when was the last time you reached out to them? We cannot, and I plead everybody, do not treat your clients wham, bam, thank you, ma'am, and just one transaction y ya se va. Like, we can't do that.
Yeah.
Right? Like, that's transactional. And I was transactional when I was a young man too, right? That's where someone one time told me, like, what's the difference between you and that young man? I'm like, well, the young man, if he's just looking for his money, I'm looking to make sure to take care of you, make sure that you develop a relationship with me so you can refer me your friends and family, and this is what I'm going to do.
Correct. Yeah.
All right. I like that answer. You know what I mean? So we got to love and care our clients.
Absolutely. Yep. Relationships.
Relationships are everything.
Yep. Okay, Javier, for someone watching right now, and they were looking to purchase a home in the next 6 to 12 months, what are the top 3 things they should be doing?
If someone was buying the next 6 to 12 months, what are the top 3 things they should be doing? Number 1, I would say if you have like little miscellaneous debts, when I say miscellaneous debts, like that credit card with $300 here, $400 here, start paying those off. Kind of have a clean debt profile if you can.
Clean up your DTI.
Clean up your debt to income ratio, right? That's number 1. Number 2, start planning on how much money you actually have for the investment, right? Because I always tell people, even with down payment assistance, you're still going to need some money, right? You need your earnest money, your appraisal, and stuff like that, right?
Closing costs.
So your closing costs, right? So start figuring out, like, all right, how much money do I actually have to spend, or how much money can I save by the time that I'm ready? That's number 2. And then number 3, I would say, the application, and this is the reason why I push the application. Every once in a while, even if you're buying 6 or 9 months down the road, let's take a look at what's on the credit report. Maybe there's something on there that shouldn't be on there.
Let's get ahead of it.
Let's get ahead of it.
Yeah.
At least, right? It's a soft pull, no effect or anything. Those 3 things, they'll prepare you so that this way, by the time you're ready, you're actually ready. I've had those clients where like, no, I know I have 800 credit scores, I make buku bucks, I got this, and then all of a sudden we pull the credit and it's like, boom, there's something that pops up. I had one. Do you remember when the student loans were like in super deferment for like a long time?
Yes.
And then they kicked back in?
Yeah.
So I had a pobre buyer. She didn't realize it. So it was reporting like 5 months late her student loans. She did have an 800 credit score.
I've
didn't
had one
stay
of those
at an
stories.
800 credit score. It went down like to 720. So believe it or not, it made about a quarter difference in her interest rate, obviously, right? So it's like now you have to explain that question and stuff like that. But I would say those are the three things right now that people need to do if they want to prepare themselves for the next 6 to 12 months.
Okay. So your down payment does affect your credit rate, your rate.
Well, yeah, your down payment, how much you put down is going to affect your interest rate, right? So that's why like they have different factors. I usually say it goes in like 5% increments, right? So like usually you'll see one tier. Well, actually conventional, they got 3% down if you're a first-time home buyer, right? But like 5, 10, 15, 20. Believe it or not, sometimes low level price adjustments, doing 10% down is going to get you a better interest rate than 20% down in certain cases, right? So I've had some consumers, and we could talk about this in another episode because that's like a long one, and I'm going to nerd out and everything on that. But the low level price adjustment, I had a client where I was like, hey, we're going to do 10% down, but I'm going to get you a 6.25 instead of a 6.5 that we would have gotten with the 20% down. And then after closing, he went ahead and did the rest of the down payment, recast his mortgage, so his amortization and everything got all set, but he got the lower interest rate. Right? So that is some Houdini stuff that I know. It goes a longer way. It goes a longer way, right? Yes. So those are like those little secrets that those 20-something years are paying dividends right now. You know what I mean?
That's experience. Javier, last question. What are the top 5 mistakes buyers make before closing?
Oof. Top 5?
Top 5.
Top 5. I'm gonna have some fun with this, okay?
Okay.
So number 1, stop requesting your day off for your closing until you have a CTC. You know how many times I get buyers that are mad because there was a delay in their transaction?
I had to take a day off work.
I already had to take a day off work. I was like, you weren't even clear to close.
Yes.
So number 1,
that's a good one.
Don't tell your boss you're closing on your loan until I tell you you're closing on your loan.
Correct.
All right. Number 2, large cash deposits. My Latinos, you guys are the biggest culprit, to be quite honest with you. All right, I always got my doñas and my dons, and I'm like, what is this $15,000 cash deposit that I'm seeing? Oh, es que Javier, and cash is not able to be used in a transaction. So avoid large cash deposits. We could put it in email with highlight 19 font. They will still do it. Okay. Okay. So number 2, avoid large cash deposits. Number 3. This could sometimes delay a transaction. Don't get your credit pulled while you're in the home buying process, right? So that's why I always say, like, if you're going to shop around for approval, you know,
bed you may want.
Exactly. Or if you're shopping, right, and all of a sudden they're like, hey, would you like to open a department store credit card?
Yes.
Even if you didn't purchase anything, but you opened the account.
Like sometimes, you go to Home Goods to buy something, they ask you, do you want to open up a credit account? While you're under contract until closing, don't do it, right? You're just going to, you're going to save yourself some headaches. Oh, absolutely.
Right? Fourth one, obviously, don't lose your job. Don't switch jobs. I've had that.
Don't switch jobs.
I had a client, she took a different job because they were paying her like $20,000 more a year. So I get it. And she forgot to tell us. So the day of closing, this is like the most surreal thing that happened to me. Like, hey, your BOE came back that she's not employed. I was like, what do you mean? I'm like, I look at her and I'm like, you're not employed anymore? She's like, oh, I don't work for them anymore. I work over there.
BOE, verification of employment.
So thank God.
It's done at the last minute.
Thank goodness I had some clout.
Yeah.
And we got the verification of employment back. Yes. Thank goodness she was salary. And we got the loan re-cleared at the closing table. All right?
Saved.
But yeah, don't switch your jobs or don't lose your job, the fourth one. And then the fifth one I would tell everyone is be careful with preemptive spending. So I've had a situation where clients all of a sudden are starting to go buy furniture and they're doing this, and all of a sudden there's like a hiccup or something, right? Maybe the appraisal came in lower. So now the seller credit's going to be removed because the seller is like, hey, they're lower price. Now there's no seller credit. And all of a sudden that $5,000 that we were accounting for is no longer there.
Nope.
And all of a sudden the client's like, well, I don't got the money anymore because I went out and bought a new bed set, a new living room set, and I paid for it with my own funds, right? So kind of goes back to like getting ahead of ourselves. Until you're clear to close,
don't touch your accounts.
Keep everything good. Or check in with your loan officer. Be like, hey, I'm planning on making this move. Is it okay?
Consult back.
Consult back, right? So always ask. If you don't know, ask. Don't make assumptions either. Because I've also had those really confident people that just make assumptions all the time. They're like, well, why? Why can't I do that? You told me my cash to close was only this. Why do I need this? Well, because you're buying a multi-unit or you need a reserves.
The reserves. Yeah.
Right?
Yeah.
So
touch those
definitely don't get
reserves.
ahead of
Yep.
yourself too
Mhm.
much. You know, until you have the formal
Great
clear
tips.
close, you're not
That makes
clear to
sense.
close.
Yep. So Javier, this is very, very valuable information. Tell them, where can people find you?
I would say social media. You can always find me on social media. I'm the social media darling here at Rate. So buy
Yes.
with Javi on Instagram. That's my handle. You can always follow me there. All of my handles are on there. You could also search me on Google, and I've actually verified this, Javier Garcia Mortgage, and you're gonna see like the 26 years of experience on
Correct.
there. So very, very easy to find me. Or buy with Javi at Rate. Just send me an email and we'll schedule a consultation and figure out what we can do to help you with home ownership, real estate investing as well too. I am considered the FSBO King, for sale by owner king. So if you have a for sale by owner where maybe they don't want to work with a real estate agent because they don't even want to talk about commissions or anything, I can assist you with that as well too, right? So you just need money to buy the house from them. I'm the money guy. Let's get connected.
Makes sense. Thank you, Javier. My name is Mario Zelaya, and hopefully all this information was valuable to all the home buyers out there.